Everything we thought we knew about safe haven assets is being rewritten in real time. If you are looking at your portfolio today, you are likely seeing a sea of red, with one terrifying spike in the energy sector. Crude oil is surging, breaking through resistance levels we haven't seen in years, and analysts are now openly predicting that the $200 ceiling could be shattered within weeks. The Strait of Hormuz is a war zone, and the global energy supply chain is effectively snapping before our eyes. By all traditional logic, every precious metal on Earth should be skyrocketing alongside gold. Gold is doing exactly what it is supposed to do, hitting all-time highs as money flees into safety. But then there is silver. Look at the charts. Silver is not rallying, it is crashing. It is bleeding out. In the middle of the most significant geopolitical escalation of the last decade, a monetary metal is being sold off as if it were worthless. This is the anomaly. This is the signal that everyone is missing. We are staring at a market that is reacting to yesterday's playbook, completely blind to the reality of tomorrow's economy. With oil supplies cut off, the world needs solar energy more than ever before. Solar panels require silver. The physics of energy conductibility do not care about market sentiment. So why is the price dropping? We are staring at the biggest supply squeeze in history, and the market has got the price wrong. Welcome back to What Changes. I am your host, May. Today, we are not just talking about price action, we are talking about survival. We are mapping out the collision course between a broken fossil fuel supply chain and the critical metals required to replace it. We are looking at why Wall Street is panic selling the one asset that the world is about to run out of. This is the story of the energy crisis paradox, and why the current crash in silver might be the greatest mispricing of the 21st century. To understand why this is happening, we first have to step inside the mind of the institutional investor right now. The algorithms trading these markets are programmed with a very specific historical logic. That logic dictates that when a major war breaks out in the Middle East, specifically one that threatens to choke off the oil supply, the global economy hits a brick wall. The closure of the Strait of Hormuz does not just mean expensive gas. It implies that factories in Germany shut down. It means manufacturing hubs in China go dark. It signals a global recession that makes 2008 look like a mild correction. In that worldview, silver is not viewed as money, it is viewed as an industrial commodity. The algorithms see silver the same way they see copper or iron ore. If the factories stop running, the logic goes, nobody needs copper and nobody needs silver to build electronics, cars, or brave new tech gadgets. The selling we are seeing today is a bet on a global depression. It is the market pricing in a total collapse of industrial demand. They are dumping silver because they believe the world is about to stop building things. But this is where they are wrong. They are assuming that this crisis is a pause button. They think we will just sit in the dark and wait for the oil to come back. They are missing the frantic, desperate pivot that is already happening behind closed doors in Washington, Brussels, and Beijing. This isn't a recession, it is a transformation. The shutting of the oil tap doesn't mean we stop consuming energy, it means we have to get it from somewhere else immediately. The demand isn't disappearing, it is shifting, and it is shifting toward the only energy source that can be deployed rapidly and does not rely on a pipeline running through a war zone. Let's talk about the frantic scramble for energy independence. When the Strait of Hormuz closes, energy security ceases to be a political talking point about climate change and becomes a matter of national security and immediate survival. Europe cannot afford to wait 5 years for a new nuclear plant to be built. They cannot wait 10 years to explore new oil fields in the Arctic. They need power on the grid in 6 months. The only energy infrastructure that can be manufactured and deployed that quickly is solar. This is the geopolitical angle that the paper markets are ignoring. We are about to witness a wartime mobilization of the solar industry. Governments are going to mandate the installation of photovoltaic cells on residential roofs, industrial warehouses, and open fields, not to save the planet, but to keep the lights on and the hospitals running. This is no longer about green energy. This is about freedom energy. It is about decoupling the Western economy from the instability of the Middle East. Here is the problem with that pivot. You cannot build a high-efficiency solar panel without silver. It is the most conductive metal on the periodic table. It is the veins and arteries of the photovoltaic cell. Despite years of trying to thrift it out or replace it with copper, silver remains essential for the top-tier panels that governments are going to demand. The sheer volume of silver required to offset even a fraction of the oil energy lost from the Middle East is staggering. We are talking about hundreds of millions of ounces of additional demand, hitting a market that was already in a deficit. For the last 3 years, the world has consumed more silver than it has mined. We have been eating into above-ground stockpiles. The warehouses in London and Shanghai have been draining, and that was during peacetime. That was when oil was flowing freely. Now add a panicked government-subsidized rush for solar panels on top of that structural deficit. The paper price of silver, the number you see flashing red on your screen, is being set by futures contracts, digital promises to deliver metal that may or may not exist. These contracts are being sold by traders who are looking at chart patterns and recession indicators. But the physical market, the actual metal you can hold in your hand, operates on a different reality. While the paper price drops, the premiums on physical coins and bars are likely already decoupling. We have seen this movie before, but never on this scale. The market is pricing silver as if it were a luxury item that people will stop buying when times get tough. But in a post-oil war economy, silver is not a luxury. It is a strategic resource. It is as vital as the uranium in a nuclear warhead or the lithium in a battery. The disconnect we are seeing today, the crash in price amidst a spike in necessity, is the definition of a market failure. Think about the supply side of this equation. Most of the world's silver is not mined directly. It comes as a byproduct of mining for other base metals like lead, zinc, and copper. If the recession thesis holds true and general mining slows down because demand for those base metals drops, then the supply of silver drops with it. We are looking at a scenario where demand for silver explodes due to the solar panic, while the supply of silver contracts due to the economic slowdown. It is the perfect storm. It is a supply squeeze that could make the nickel squeeze of a few years ago look like a minor blip. So what changes? What happens when the paper market collides with physical reality? Eventually, the industrial buyers, the solar manufacturers like First Solar, the electronics giants like Samsung, and the defense contractors making guidance systems will come to the market to take delivery. They won't care about the spot price on the COMEX. They will need the metal to keep their assembly lines running and to fulfill government contracts. When they realize the metal isn't there at $25 or $26 or wherever the algorithm has pushed it down to, the panic buying will begin. But this time, it won't be investors panic buying. It will be industry. It will be governments. And when industry panic buys a strategic commodity, the price doesn't just drift up, it resets. We are likely looking at a violent repricing of silver that reflects its true value as an energy metal, not just a precious metal. The ratio between gold and silver, which has blown out to historical extremes during this crash, will have to snap back. For the individual investor, this moment represents a terrifying but rare opportunity. The crowd is running out the door. The sentiment is apocalyptic. The financial news networks are telling you that commodities are dead because the global economy is crashing. They are telling you to hold cash or buy bonds or stick to gold. They are looking at the recession of yesterday, not the energy transition of tomorrow. The paradox of the energy crisis is that the very event that crushes the global economy, the loss of cheap oil, is the catalyst that makes silver indispensable. We are moving from an economy powered by burning liquid dinosaur remains to an economy powered by collecting photons. The bridge between those two worlds is built out of silver. If you believe that the world will simply give up and turn off the lights, then yes, sell your silver. But if you believe that nations will fight, scrape, and build to secure their energy future, then you have to look at this price drop and ask yourself if the market has lost its mind. The volatility we are seeing right now is the death throes of the old pricing model. It is the friction of a tectonic shift. In the coming weeks, pay attention to the physical inventories. Watch the premiums on bullion. Watch the delivery numbers on the exchanges. The paper price is a distraction. The real story is the flow of physical metal into the energy sector. We are standing at the edge of a new era. The era of cheap energy is over. The era of the resource wars has begun. And in this new world, silver is not just a shiny metal to hoard in a safe. It is the fuel of the future. The market hasn't realized it yet, but it will. And when it does, the change will be instant. I'm May, and this is what changes. Keep your eyes on the physicals, not the futures. Stay safe out there.